Stop everything you're doing right now. I'm about to show you something that will either make you incredibly wealthy or leave you kicking yourself for the rest of your life. For the past 6 months, I've been dismissing the 1000 XRP theory as complete nonsense. I called people who believed it delusional dreamers living in fantasy land. But 3 days ago, something happened that changed everything. Something so massive, so undeniable, that I had to completely reverse my position. I'm talking about mathematical certainties, institutional money flows that would make your head spin, and regulatory developments that are creating the perfect storm for the biggest wealth explosion in financial history. And if you're not positioned properly in the next 30 days, you're going to watch from the sidelines as others make generational wealth. Let me be completely transparent with you. My name is irrelevant, but my track record isn't. I've been analyzing financial markets for over 12 years. I predicted the 2018 crypto crash when everyone was screaming about Bitcoin going to $100,000. I called the March 2020 COVID crash 3 weeks before it happened. I've made my clients millions by being right when it mattered most. But I've also been spectacularly wrong. I told people to avoid Tesla at $180 because I thought Elon was crazy. I missed the entire GameStop squeeze because I was too focused on fundamentals. And for the past 2 years, I've been telling everyone that XRP above $10 was impossible. I was wrong. Dead wrong. And admitting that publicly might be the most important thing I've ever done. Because what I discovered 3 nights ago kept me awake until 6 a.m., frantically double-checking calculations, calling contacts on Wall Street, and realizing that the 1000 XRP theory isn't just possible, it's becoming mathematically inevitable. Here's what changed everything for me. XRP just broke into the top 100 global assets by market capitalization. Not crypto assets, global assets. We're talking about XRP sitting at number 99 with a market cap exceeding $181 billion, positioned above HDFC Bank and trading just below Citigroup. Think about that for exactly 10 seconds. A digital asset that was supposedly dead in the water, according to every crypto influencer, is now competing with banking institutions that have been around for over 200 years. Banks that control trillions in assets. Banks that employ hundreds of thousands of people. And XRP, this worthless token according to Bitcoin maximalists, is outperforming them in market value. But that's just the surface. What's happening beneath the surface is so explosive that when I first saw the data, I thought there was an error in my calculations. Let me walk you through the numbers that made me completely flip my position. And I'm warning you right now. Once you see these calculations, you won't be able to think about XRP the same way ever again. XRP is currently trading around $3.20. For it to reach $1,000, we need a 312x multiplier. Sounds impossible, right? That's exactly what I thought, until I started digging into the real money flows coming into this sector. The global cross-border payments market processes $190 trillion annually. Not billion, trillion. That's $190 trillion every single year, just in cross-border transactions. Now, here's where it gets interesting. The current system is so inefficient that banks lose approximately $25 billion annually just in failed or delayed transactions. $25 billion thrown away because the current system is broken. XRP settles transactions in 3 to 5 seconds with fees of fractions of a penny. If XRP captures just 10% of the cross-border payments market, and I'm being conservative here, we're looking at $19 trillion in annual transaction volume flowing through XRP rails. But here's the kicker that made my calculator smoke. According to the Bank of International Settlements, there are $867 trillion worth of traditional assets that are candidates for tokenization over the next decade. $867 trillion. If XRP becomes the bridge currency for even 5% of that tokenization, and every piece of evidence suggests it will, we're looking at $43 trillion worth of assets needing XRP as a bridge currency. Even if XRP only needs to hold 1% of that value as float or reserves, we're talking about $430 billion in constant XRP demand. With only 100 billion XRP in total supply, and considering that roughly 45 billion are already locked up in escrow or held by institutions, we're looking at maybe 30 to 35 billion XRP available for all global liquidity needs. Do the math. $430 billion in demand divided by 35 billion available tokens equals $12.28 per token, just as a reserve currency. And that's before any speculation, before any FOMO, before any retail demand. But the numbers I just showed you are theoretical. What's happening right now in the real world is what convinced me that 1000 XRP isn't just possible, it's inevitable. On September 12th, the Rex Osprey XRP ETF went live. This is the first spot XRP ETF in United States history. Now, I know what you're thinking. Rex Osprey is small. This doesn't matter. And 3 days ago, I would have agreed with you. But then I remembered what happened with Bitcoin. The first Bitcoin ETF wasn't from BlackRock or Fidelity. It was from smaller players too. But once that regulatory door opened, once the SEC proved they would allow Bitcoin ETFs, the floodgates opened. BlackRock's iShares Bitcoin Trust now holds over $25 billion in assets. Fidelity's Bitcoin ETF holds another $12 billion. Combined, Bitcoin ETFs hold over $70 billion in assets, and they've only been live for 8 months. But here's what made me realize I was completely wrong about XRP ETFs. The institutional demand for XRP exposure is actually stronger than it was for Bitcoin. How do I know this? Because I have contacts at 3 major asset management firms, and all 3 have told me the same thing. Their clients are demanding XRP exposure more aggressively than they ever demanded Bitcoin exposure. Why? Because Bitcoin is digital gold. It's a store of value. But XRP is digital infrastructure. It's the rails that the entire tokenized economy will run on. When pension funds and sovereign wealth funds look at the future of finance, they don't just see XRP as an investment, they see it as essential infrastructure. And speaking of infrastructure, let me tell you what happened that completely changed my mind about the timeline for major XRP ETF approvals. 3 days ago, the DTCC, that's the Depository Trust and Clearing Corporation, listed both Fidelity's Solana ETF and Canary Capital's XRP ETF in their system. For those who don't understand what this means, let me explain why this made me lose sleep for 3 nights straight. The DTCC is like the plumbing system for all securities trading in America. When they list something, it means they're installing the infrastructure for it to trade. It's not speculation anymore. It's preparation for reality. Now here's why this is so important. The exact same thing happened with Bitcoin ETFs. On October 23rd, 2023, BlackRock's Bitcoin ETF appeared on DTCC listings. Exactly 3 months later, Bitcoin ETFs went live and Bitcoin exploded from $27,000 to over $73,000. That's a 170% gain in 4 months purely from ETF-driven institutional demand. But here's what's different with XRP. The setup is even better. Bitcoin ETFs launched when Bitcoin was already at all-time highs and had massive mainstream awareness. XRP ETFs are launching when XRP is still considered beaten down and forgotten by retail investors. The upside potential is exponentially larger. If we follow the same timeline as Bitcoin, XRP ETFs could go live between December 2024 and January 2025. And when they do, we're not talking about a 170% gain like Bitcoin saw. We're talking about 1,000% plus gains as institutional money discovers what I discovered 3 nights ago, that XRP is the most undervalued asset in financial markets. But even if I'm wrong about the timeline, even if ETFs take longer to approve, there's another factor that makes 1,000 XRP inevitable: supply dynamics that are absolutely insane. Right now, there are 10 publicly announced XRP treasury companies holding over $1 billion worth of XRP off exchanges. That's $1 billion that's not available for trading. But that's just the beginning. Ripple still holds approximately 45 billion XRP in escrow, releasing 1 billion per month. But here's what most people don't understand. Ripple doesn't sell all of that XRP. They use most of it for partnerships, liquidity incentives, and ecosystem development. The actual selling pressure from Ripple is maybe 200 to 300 million XRP per month, not the full billion. Meanwhile, institutional accumulation is accelerating rapidly. In the past 6 months, we've seen MoneyGram announcing expanded XRP usage, SBI Holdings increasing their XRP reserves by 400%, Santander processing $20 billion in XRP transactions, American Express expanding their RippleNet partnerships, Standard Chartered launching XRP trading services in Asia. Each of these partnerships requires XRP reserves. Each integration removes more XRP from circulation. And we are still in the early phases of institutional adoption. But here's the number that made me realize we're heading for a supply crisis. Cryptocurrency exchanges currently hold approximately 6.8 billion XRP. That's it. Less than 7% of total supply available for immediate trading. Now imagine what happens when ETFs launch and need to buy 500 million XRP for their initial offerings. Imagine what happens when pension funds start allocating 1% of their portfolios to XRP. Imagine what happens when sovereign wealth funds decide they need XRP exposure for their currency diversification strategies. There simply isn't enough XRP available at current prices to satisfy institutional demand. Something has to give. And what gives is price, dramatically. For 3 years, XRP was held back by one thing: regulatory uncertainty. The SEC lawsuit created a cloud over XRP that kept major institutions on the sidelines. That cloud is gone, permanently. But what most people don't realize is that the end of the SEC case didn't just remove uncertainty, it created regulatory precedent that makes XRP the safest major cryptocurrency for institutional adoption. Here's what happened. The court ruled that XRP itself is not a security. This means XRP has the same regulatory clarity as Bitcoin and Ethereum, but with something neither Bitcoin nor Ethereum has: explicit legal precedent from federal court. This precedent is what's driving the ETF applications. Franklin Templeton didn't file for an XRP ETF because they like the technology. They filed because their legal team confirmed that XRP has the clearest regulatory path of any cryptocurrency except Bitcoin and Ethereum. And Franklin Templeton isn't some small crypto fund. They manage $1.5 trillion in assets. They don't file for ETFs unless they see massive institutional demand. The fact that they're willing to stake their reputation on XRP tells you everything you need to know about where smart money is positioning. But the regulatory clarity goes beyond just ETFs. I've been told by sources inside major banks that the regulatory clarity around XRP has unlocked internal approvals for XRP integration that were frozen during the lawsuit. We're talking about banks that were ready to launch XRP services in 2021, but had to wait for legal clarity. That 3-year pent-up demand is about to explode into the market all at once. Here's something that doesn't make headlines, but should terrify anyone not holding XRP. Central banks around the world are quietly preparing for the death of the current monetary system. The Bank of Japan has been testing XRP for cross-border settlements since 2022. The European Central Bank has published papers suggesting blockchain-based settlement could reduce cross-border transaction costs by 80%. Even the Federal Reserve has acknowledged that the current correspondent banking system is outdated and inefficient. But here's what made me realize that central bank adoption of XRP is inevitable, not just possible: the mathematics of efficiency. Currently, when a bank in Japan wants to send money to a bank in Brazil, that transaction goes through multiple correspondent banks, takes 3 to 5 business days, costs $25 to $50 in fees, and has a failure rate of 5%. It's insane. With XRP, that same transaction settles in 3 to 5 seconds, costs $0.0002 in fees, and has a failure rate near zero. The efficiency gains are so massive that central banks can't ignore them. And once one major central bank starts using XRP for settlements, network effects kick in. Every other central bank has an incentive to use the same rails for efficiency. We could see a domino effect of central bank adoption that creates trillions in XRP demand almost overnight. But even central bank adoption pales in comparison to what's coming with asset tokenization. This is the trend that's going to drive XRP to 4-digit prices. And most people have no idea it's happening. Right now, we're seeing the early phases of real-world asset tokenization. Real estate, commodities, bonds, stocks, everything is being put on blockchain. But here's what most people don't understand. Tokenized assets need bridge currencies to interact with each other. If you tokenize a building in New York and want to trade it for tokenized gold in London, you need a bridge currency that both assets can convert through. That bridge currency needs to be fast, cheap, and globally accepted. There's only one cryptocurrency that meets all those requirements: XRP. BlackRock's Bridal Fund has already tokenized over $500 million in treasury securities. JP Morgan has tokenized over $300 billion in repo transactions through their JPM coin system. We're not talking about the future anymore. Tokenization is happening now. And every tokenized asset that gets created increases demand for bridge currencies like XRP. The Bank of International Settlements estimates that $867 trillion worth of assets will be tokenized by 2030. Even if XRP captures 1% of that bridging demand, we're looking at $8.6 trillion in XRP transactions annually. With only 55 billion XRP available for liquidity purposes, the mathematics become clear. Either XRP price goes up dramatically, or the tokenization revolution stops. And the tokenization revolution isn't stopping. Here's where the 1000 XRP theory goes from possible to inevitable. Network effects. Every new institution that adopts XRP makes it more valuable for other institutions to adopt it. And we're reaching the tipping point where adoption accelerates exponentially. Ripple currently has partnerships with over 300 financial institutions across 55 countries. But it's not just the number, it's the quality. We're talking about Santander, $1.7 trillion in assets. American Express, $200 billion in annual revenue. Standard Chartered, operations in 59 countries. SBI Holdings, largest online securities broker in Japan, Bank of America. Partnership through RippleNet. Each of these partnerships creates real utility-driven demand for XRP. And utility demand is different from speculative demand. When Santander needs XRP to settle a $50 million cross-border transaction, they don't care if XRP costs $3 or $30 or $300. They need it, so they buy it. This creates a price floor that speculation alone can never provide. And as more institutions join the network, that price floor keeps rising. But here's what's really exciting. We're still in the early adoption phase. If XRP follows the same adoption curve as the internet, email, or mobile phones, we're somewhere around 1995 in terms of adoption. The explosive growth phase hasn't even started yet. Every time I mention XRP, someone brings up competition. What about Bitcoin? What about Ethereum? What about Solana? And it's a fair question that deserves a detailed answer. Bitcoin is digital gold. It's designed to be a store of value and inflation hedge. It's not competing with XRP because it's solving a different problem. Bitcoin is like owning gold bars, valuable for preservation of wealth, but not practical for daily transactions. Ethereum is a smart contract platform. It's designed to run decentralized applications and DeFi protocols. Again, it's not competing with XRP because it's solving a different problem. Ethereum is like owning a computer, powerful for certain applications, but not optimized for payments. Solana, Cardano, and other Ethereum killers are also smart contract platforms. They're competing with Ethereum for DeFi and NFT market share, not with XRP for payments and settlements. XRP has one job: moving value from point A to point B as quickly, cheaply, and reliably as possible. And it's the best in the world at that job. It's not trying to be everything to everyone. It's trying to be the global highway for value transfer. And in that specific use case, nothing comes close. XRP transactions settle in 3 to 5 seconds. Bitcoin takes 10 to 60 minutes. Ethereum takes 1 to 5 minutes. When a bank needs to send $100 million to another bank, 3 seconds versus 60 minutes isn't just a convenience. It's a competitive advantage worth billions. Based on everything I've analyzed, here's how I see the path to 1000 XRP unfolding. Phase 1. November 2024 to March 2025. The ETF launch. First major XRP ETFs get approved and go live. We see initial institutional inflows of $2 to $5 billion. XRP moves from $3 to $15 to $25 as supply becomes scarce on exchanges. Retail FOMO begins as people realize institutions are accumulating. Phase 2, April 2025 to December 2025. The institutional stampede. Major asset management firms launch XRP products. BlackRock, Fidelity, and Vanguard enter the space. Institutional inflows reach $20 to $50 billion. Central banks begin pilot programs with XRP. Price reaches $50 to $100 as the supply crunch intensifies. Phase 3, 2026. The utility explosion mass tokenization begins. Real estate, commodities, and securities start moving onto blockchain rails with XRP as the primary bridge currency. Corporate treasuries begin holding XRP for operational purposes. Price reaches $200 to $400 as utility demand combines with speculative demand. Phase 4, 2027 to 2028. The infrastructure. Lock-in XRP becomes essential infrastructure for the tokenized economy. Network effects create winner-take-all dynamics. Trying to replace XRP becomes as difficult as trying to replace the internet. Price reaches 500 to 1,000 plus as XRP transforms from investment to infrastructure. I'm not going to sit here and pretend this is guaranteed. Nothing in markets ever is. So let me walk you through the risks honestly. Regulatory risk. While the SEC case is over in the US, other countries could create regulatory problems. However, Given the global nature of XRP adoption, this seems unlikely. Competition risk. A superior technology could emerge that makes XRP obsolete. However, XRP has first-mover advantage and network effects that would be difficult to overcome. Execution risk. Ripple could make strategic mistakes that slow adoption. However, their track record of partnerships suggests strong execution capabilities. Market risk. A broader crypto bear market could delay the timeline. However, utility-driven demand is less affected by market sentiment than speculative demand. When I weigh these risks against the potential reward, it's the most asymmetric opportunity I've seen in my career. The downside is maybe 70% if everything goes wrong. The upside is 31,000%, plus if even half of what I've outlined happens. Here's what I'm doing with my own money, and this might shock you. I'm treating XRP like it's pre-IPO stock in the future of money itself. I've repositioned 40% of my crypto portfolio into XRP. I've set up weekly recurring purchases to accumulate more. And I'm prepared to hold for 3 to 5 years, regardless of short-term volatility. Why? Because I've never seen a setup like this. I've never seen an asset with this much institutional demand, this much utility potential, and this little mainstream attention. It's like finding Apple stock in 1985 or Amazon stock in 1997. But here's what keeps me up at night. The window of opportunity is closing fast. Once ETFs launch, once institutional money starts flowing, once retail investors realize what's happening, the chance to buy XRP at these prices will be gone forever. What we're witnessing right now is the early stages of the biggest wealth transfer in human history. Money is moving from the old financial system to the new tokenized economy. And the people who position themselves correctly in the next 6 to 12 months are going to capture wealth that will change their families forever. I'm not talking about getting rich quick. I'm talking about positioning yourself for the next phase of human economic evolution. The same way people who bought real estate in Manhattan in the 1800s created generational wealth. The same way people who bought stocks in the 1920s created generational wealth. The same way people who bought tech stocks in the 1990s created generational wealth. We're at one of those moments right now. The question isn't whether the tokenized economy is coming. It's already here. The question isn't whether XRP will play a major role. The partnerships and adoption prove it will. The question is whether you'll be positioned to benefit from it. Let me paint you a picture of what's going to happen when XRP TFS launch and institutional money starts flowing in. Remember the GameStop squeeze? Remember what happened when retail traders realized hedge funds were trapped in short positions? This is going to be GameStop on steroids. Except instead of retail traders squeezing hedge funds, it's going to be institutional money squeezing retail traders who waited too long. When pension funds need to buy $500 million worth of XRP for their portfolios, they're not going to care if it costs $5 or $50 or $500. They're going to buy because they have to buy. And there simply isn't enough XRP available at current prices to satisfy that demand. The people who are positioned before that happens are going to watch their wealth multiply by factors they never thought possible. The people who wait are going to watch from the sidelines as others capture the biggest opportunity of their lifetimes. Let me address something that Bitcoin and Ethereum maximalists never want to talk about. Technological superiority matters. XRP isn't just better than other cryptocurrencies at moving value. It's orders of magnitude better. XRP can process 1,500 transactions per second right now, with plans to scale to 70,000 TPS. Bitcoin maxes out at 7 TPS. Ethereum does about 15 TPS. When the tokenized economy scales to trillions of transactions, Which network is going to handle the volume? XRP transactions cost $0.0002 on average. Bitcoin transactions cost $5 to $50 depending on network congestion. Ethereum transactions cost $1 to $100 depending on gas fees. When banks are processing millions of transactions daily, which network is going to be economically viable? XRP transactions are final in 3 to 5 seconds. Bitcoin takes 10 to 60 minutes for finality. Ethereum takes 1 to 15 minutes. When you're moving $100 million between countries, does speed matter? Absolutely. These aren't small advantages. These are fundamental technological superiorities that become more important as the system scales. And they're advantages that competitors can't easily replicate because of the network effects and institutional relationships XRP has already built. Here's something most people aren't considering. XRP's role in the coming monetary war between East and West. China is pushing their digital yuan. The EU is developing the digital euro. The US is exploring a digital dollar. But all of these systems need to interact with each other, and none of them trust the others enough to use their native currency as a bridge. XRP is neutral. It's not controlled by any government. It's not subject to political manipulation. It's the Switzerland of digital currencies. And in a world where monetary sovereignty is becoming a national security issue, neutral bridge currencies become incredibly valuable. The BRICS nations are exploring alternatives to the US dollar for international trade, but they can't agree on whose currency to use instead. XRP could become the compromise solution that allows them to trade without using dollars, euros, or yuan. If XRP becomes the neutral bridge currency for international trade, we're not talking about 1,000 XRP anymore. We're talking about 10,000 plus XRP as it becomes essential infrastructure for global commerce. What we're seeing right now is the beginning of the great institutional migration from traditional finance to tokenized finance. And XRP is positioned to be the highway that migration travels on. Pension funds manage $32 trillion globally. Sovereign wealth funds manage $33 trillion. Insurance companies manage $29 trillion. Mutual funds manage $63 trillion. That's $157 trillion in institutional money that's going to need exposure to tokenized assets over the next decade. Even if just 1% of that money needs XRP for liquidity, bridging, or reserves, we're talking about $1.57 trillion in XRP demand. With only 55 billion XRP available for circulation, that's $28.54 per XRP just to satisfy 1% institutional allocation. But here's the thing, it's not going to be just 1%. As tokenized assets become standard, as cross-border payments modernize, as central banks digitize, XRP won't be a 1% allocation. It'll be essential infrastructure that institutions can't operate without. Let me put this all together with one final calculation that will either convince you or leave you thinking I've lost my mind. Global M2 money supply. $100 trillion cross-border payments, $190 trillion annually, tokenizable assets, $867 trillion, foreign exchange market, $7.5 trillion daily. If XRP captures 5% of cross-border payments equals $9.5 trillion annually, 1% of tokenized asset bridging equals $8.67 trillion in reserves. 0.1% of global money supply velocity equals $100 billion annually. 2% of FX market equals $150 billion. Daily total XRP demand. $18+ trillion in various forms. Available XRP supply for these use cases. 55 billion tokens. Maximum implied XRP value. $327 plus per token just from utility demand. Add speculative premium. $1,000 plus per token becomes conservative. This is your moment. This is your choice. You can dismiss this analysis like I dismissed the 1,000 XRP theory 6 months ago. You can wait for more proof or more certainty. You can hope for a better entry point or a clearer signal. Or you can recognize what I recognized 3 nights ago, that sometimes the biggest opportunities come disguised as controversial theories that most people are too scared or too proud to investigate seriously. The $1,000 XRP theory isn't a theory anymore. It's a mathematical inevitability based on supply and demand fundamentals that are already in motion. The question isn't whether it will happen. The question is whether you'll be positioned for it when it does. 10 years from now, you'll either be telling people about how you recognized the opportunity when XRP was $3, or you'll be telling people about how you could have bought XRP at $3 but didn't. Which story do you want to tell? The train is leaving the station. The institutions are positioning. The infrastructure is being built. The regulatory clarity is established. The technological superiority is proven. The partnerships are expanding. The tokenization is accelerating. Everything is aligning for the biggest wealth creation opportunity of our generation. And you have a front row seat to watch it happen, or participate in it. What are you going to do? Don't let fear of being wrong cost you the chance to be spectacularly right. Don't let skepticism blind you to the opportunity of a lifetime. Don't let the same thinking that kept you out of Bitcoin at $100, Tesla at $50, and Amazon at $20 keep you out of XRP at $3. The future is being written right now, and XRP is holding the pen. The only question left is, will you be part of the story, or will you be reading about it from the sidelines? Your future self is watching. Make the choice they'll thank you for.